Guy, I usually would ask you about the market and what had happened, but I think we need to focus to start the show on gold. You've been talking about gold for a long time. Gold was up nearly $50 an ounce today, and I have absolutely no idea why. Maybe you do.
Well, I think you have an idea why, Brian. I mean, it's because people are looking at our Federal Reserve. Their balance sheet is just expanding at paces I don't think anybody could ever have imagined. I think people are realizing, you know what, gold wins in this environment. And this is not something we've been talking about for a week. This is something we've been talking about probably since last summer. So I think when the dust settles, and, you saw that sell-off in gold over the last, 3 or 4 weeks, people said, this gold move is over. I think it's just getting started. So $50 today, Newmont Mining bouncing off sort of that 41, 42 level, the GDX, the GDXJ, all moving to the upside. If you're looking for something that wins in this environment, and again, we've been steadfast with this, it's gold and the mining stocks, Brian, at least in my opinion.
All right, Tim Seymour, what about the banks? Sort of an interesting move there. Did that give you a little measure of confidence or at least comfort today?
Obviously, what let us down yesterday seemed to have rebounded. Banks were near the top of that list. And the things that rallied today, first of all, there are things that you need to see. Gold, you just talked about. One of the reasons why gold can rally is because the liquidation around so many asset classes, including gold, remember when gold was selling off, has abated. Take it back to where volatility is. We're within a whisper of a 4 handle on the VIX. I may have just jinxed that. But getting back to other asset classes, I'm not telling you market action is healthy. I'm telling you that you saw enough breadth across today's rally where not only did you have some of the troubled industries, you saw certain parts of retail that had been under a lot of duress, banks, small caps, transportation stocks. So you saw a pretty evenly based rally, but you saw the continuation of that leadership from, call it the triple Qs, call it the mega cap tech stocks, which at least for now, along with semiconductors, is part of this rebuilding of market confidence, even though there's a lot of folks, Dan talks about this, the narrowness of the rally of last year is something that people are concerned about. But in the short run, I'm constructive on that.
Yeah, and Karen Finerman, part of that big bank rally, I should say, move up, if you will, was JPMorgan. Stock up 4%, and your guy, Jamie Dimon, coming back maybe earlier than some people expected after heart surgery just a couple of weeks ago. That had to have played a role in that stock move today.
Yeah, no question. I appreciate you referring to him as my guy. He is the most seasoned and I think the most talented executive in the financial world. So it's very good to have him back at the helm. And I think that has to be part of the reason. And then I think I've heard people say, well, I'd love to see Jamie Dimon buy stock. That would really send us a message. I'd love to see that too. My strong guess is that they are in a blackout period because they are less than 2 weeks away from earnings. So I'd be curious to see when they come out the other side of earnings, where the stock trades and whether he or other insiders would be buying stock.
Yeah, if Jamie Dimon comes in and buys stock, that might be a signal to you as well. Steve Grasso, I know gold has been a focus of yours as well today. Guy Adami touched on that. How big, though, was the role of oil today? And here's why I ask. Because everybody's been slamming oil for years, saying it's tiny, it doesn't mean anything to the market anymore. It's, 4%. All of a sudden today, everybody said, oh, the move in oil is the reason stocks went up. Come on, can you have it both ways?
Yeah, I think today was it was about 90% of the reason why the market rallied. So the S&P definitely tracked oil. Didn't do it yesterday. It was inversely correlated. But I think there's a couple things going on. Today, GDP forecasts, even though they're worth nothing, don't seem to be as bad as we thought they were going to be. That's number one. Number two, you have oil has been the main reason as of late. Cyclicals are rallying. So you're looking at the banks. Look at chemicals. Then you go back to what we had this week. We had a pension fund rebalance, but a lot of pension funds said we're going to sit this one out. Today, there was $2 billion notional to buy on the close. That looks to me sneakily like the pension funds are trying to nibble away at the stocks right now. I don't think we're out of the woods. I think you have to look at some of the technical levels, which are 2475, 23.50 on the way down, and on the way up is a little bit of a lid, 26.50 on the way up. Until we can cross one of those significantly, we are range bound. But Brian, out of the 55 clients that I cover on a daily basis, everyone thinks we're going to retest the lows and fail.
I think retest certainly has been at least the market word of the last week or two, certainly